Hello, everyone. This is Adam Meister, the Bitcoin Meister, the Disrupt Meister. Welcome to the One Bitcoin Show. Today is October the 22nd, 2017. Buy and hold, strong hand, long-term thinking. All right, very special One Bitcoin Show. Obviously, on the One Bitcoin Show, we only have one topic, and that topic today is Simon Dixon. He's coming in from Hong Kong. We're on at a special time for everyone in Asia and Europe and Africa. So, Simon Dixon, welcome to the show.
Hey, thanks for having me back, Adam. So you've had to change your name, the one Bitcoin Show.
Well, yeah, we're trying to shift things around a little bit, trying to change the format some, just stick to one topic. It was supposed to only be on at one specific time also, but I wasn't able to stick with that. Some things are harder to do than others when you're traveling, but hey, people, remember to travel the world like both Simon and I do. You learn a lot, you get an interesting perspective. So speaking of worldwide perspective that you bring to this, what is the world saying about these crypto dividends, these forks, whatever you want to call them? There's a lot of talk. Obviously, people are worried about 2x. And then among the social media people are asking about B gold. So what have you gathered from your travels and your perspective?
The B gold one isn't one I've been following too much, actually. I've been more following the Bitcoin Cash, Bitcoin and SegWit 2x. And Bitcoin Gold has kind of come. It's interesting, really. The way that I see all these forks, all these dividends, whatever you want to call them, is one step at a time, proving that Bitcoin is kind of resistant to anything it throws at it. So 2017 has been an incredible year, and I'm so glad with the way it actually turned out and the way I forecast it's going to end. In that it's had so much thrown at it, and each time it has something thrown at it, it creates an opportunity for people to accumulate some cheap Bitcoins, followed by record highs. And it seems to be, it follows that pattern every single time now. So, a year in Bitcoin is an incredibly long time. But if you remember back to, I think it was mid this year, Jesus, I can't even remember the dates or anything, when we first had the announcement that Bitcoin Unlimited was going to come along. Bitcoin Unlimited led, and, hate it. No one really talks about it anymore. I think it's one of the implementations that are going to be doing something on Bcash, Bitcoin Cash, whatever you want to call it. They might come around again. But if you think about it, that was 6 months ago and no one talks about it whatsoever. So 6 months ago, we had this situation where the scaling debate had reached the point where it just wasn't going to be settled. So Bitcoin Unlimited came along and said, well, we're going to fork, we're going to create this alternative implementation, and there's going to be 2 Bitcoins. And if you remember back then, the only case study we had to work from was really Ethereum and Ethereum Classic. And so everyone was kind of, including myself, was a little bit fearful because I thought it was going to screw with the economics of Bitcoin. And the main reason that I bought, and I always, the main reason I got into this in the first place was because of the promise that there will only ever be 21 million Bitcoins. And if there is ever more than 21 million Bitcoins, then I would consider that a community, a failure to that. And I would never, ever support anything that broke that rule. So then we had Bitcoin Unlimited come along. And there was a little bit of fear. I think the price, God, it's really hard to remember, but I think the price was toying with under $1,000. Mm-hmm. And then it started to, the FUD really started to crash the price. And I think we hit maybe a low, and someone's going to fact check me, right? Probably, which is fine. But I think we hit a low of around about $600 or something, $650, something like that.
I thought it was like $860. I don't. Was this back in March, or I mean, there was.
It was this year. I'm probably confusing years because those who are a little bit older, you remember XT and Classic and all these other things we used to have from different people that wanted to fork Bitcoin and go in another direction. But yeah, maybe it went down to 850. And for those of you that were around like a year ago, 850 is a great price if it was going through steady growth. But I think we went over the 1,000 and came back down with the fear of Bitcoin Unlimited. And then it set off a series of events that really got everyone in the community to kind of decide which side of the fence they're on, whether they stand for bigger blocks, whether they want, whether they like the thought of off-chain scaling or on-chain scaling. And I call it the educational phase, where everyone that was kind of a believer in Bitcoin, had been around Bitcoin, really needed to step up and dive deep into their next phase of understanding of the technicals of Bitcoin. And it was a really, really big educational phase where everyone started to learn, about what was important to them, what Bitcoin's path might be, and really just learn a lot. And it was a very educational experience for the whole community. Everyone was breaking new ground. And then, we had this user-activated soft fork, and we had this series of game theoretical events that led to everybody making their decision about what the future of Bitcoin is, whether they wanted SegWit, whether they didn't want SegWit, and it moved everything to consensus. And so if you remember, then we had this UASF, and then suddenly these deadlines were set, and there was all the fear around, the Bitcoin Cash, Bcash, deciding that they were going to put together the next hard fork. And then we had this split in the community, which was an incredibly liberating, great experience, whereby it just showed that you can split and Bitcoin is still Bitcoin. And you have this other thing, which is an altcoin, which takes a portion of the community that really want to commit to proving that a different way of doing the economics or a different way of scaling Bitcoin can happen. And then Bitcoin can learn from that if it turns out that two megabyte blocks is a good thing, or and I think Bitcoin has been watching and has been learning. And so every time this happens, people realize, okay, the fear wasn't as bad as I thought it was. So everyone starts jumping in again. Everyone accumulates. All the people that for the last 5 years have been calling Bitcoin a Ponzi scheme, a scam, a bubble, a tulip. A percentage of them decide that it's not a Ponzi scheme, a scam, and a tulip, and decide to actually put some of their wealth into some sound money. And so then that causes record highs again. And so we then hit through the record highs, and then the next thing comes along. Now, if you remember the last thing, I mean, it seems like a lifetime ago, but it was actually only just a month or two ago, that we realized that a government was actually going to test whether they could control Bitcoin. And that came from the Chinese government. And the Chinese government decided that they were going to ban Bitcoin exchanges. They were going to make ICOs illegal. They had the justification for doing that because the ICOs were getting really, really, really out of control in China, particularly. They are now in South Korea, but they were getting really, out of control in China. And so they decided that they were going to launch an attack on this. Now, immediately that crashed the price around about $1,000. And guess what? Wall Street, every institution in the world that had been saying, okay, Bitcoin's a scam. We've been waiting for our ETF. We've been waiting for our regulations. Bitcoin's a Ponzi scheme. Bitcoin's a tulip. Bitcoin's got no value. Bitcoin has no value unless it's got an underlying asset. Bitcoin has no value because you can't touch it, you can't hold it, you can't feel it. All the things that they were like what I call the 2012, 2013 objections that seem to reemerge every time you get a cycle of new people and new adoption. They go back to the 2013 objections, and now we're getting that right now. China has its effect. It crashes the price. People come in, they buy the load of cheap Bitcoins, they continue to accumulate. They realize the economics hasn't changed. They realize that millions of these Bitcoins have been lost. There's only ever going to be 21 million of them. And that's not going to actually change. And so you enter and you go up to record highs again. So now what I believe is happening with, Bitcoin Gold is kind of, I guess, an experiment on what one can do when they actually do support Bitcoin, from what I can see, but also want to do something interesting and innovative and try and test out some new things, but in a less contentious way. And
the friendly fork, as someone's call it.
Okay, the friendly fork. And it doesn't really have too much impact other than it makes all the exchanges, all the wallets get clear on their policy. And all of a sudden, people are many of the businesses and the community are starting to realize, well, if these support them or not, the reality is that these forks are going to continue to happen and these dividends are going to continue to come. So we actually need to develop a very easy and fast way of implementing integrations with these new forks. So now all of the wallets, all of the community, and Coinbase included, all the ones that are out there making their announcements, all need to figure out what they're doing. And if they're doing the right thing, in my opinion, they shouldn't necessarily be taking a stance on these things. They should just be providing their customers with what they're entitled to, and then allow the users to make their decisions and let the market decide what the price of these things are. The reason that we're seeing, strange movements in things like Bitcoin Bcash and Bitcoin Cash is because the market didn't fully get to determine what the price is, because Coinbase held everyone's Bitcoin Cash, so they never got the opportunity to dump or pump. You had to buy them if you had your money on Coinbase, and Zappo had the same. And we saw a big downward pressure when Zappo started to determine their policy on how their customers are going to receive their Bitcoin Cash. And, I don't think they should be making opinions about whether they sell for their customers. I think that's business suicide. I don't think it's covered in anyone's terms. I just don't think it's a good decision to actually be making. But anyway, and then we have these effects. So we're just starting to see, remember, Bcash, the Coinbase customers still haven't received it. So we don't really know what the price is yet. We can see what the price is once you have these major players actually giving everyone, what they were entitled to. And then the market can take over. And so the final thing really is that, Bitcoin's just kind of proven it's resilient. It can maintain the economics. It's proven that there is only 21 million Bitcoins. It's proven that a major government can have some kind of attack and test the water. And the signal that the world and the Bitcoin community needed to give to the Chinese government was, hey, you can do this, but we're still at record highs. And I'm delighted we got there. And that's exactly what happened. Giving all governments all around the world a signal that kind of attacking the pockets of centralization that exists in the Bitcoin ecosystem is kind of a futile task for trying to curb and control. But now we've got the final test, and I believe that the final test, there's no doubt about it. So you could put the Bitcoin Cash as kind of attack from some of the very influential miners. You could call the China attack an attack from the very influential governments. And I think you can call the 2X an attack from some of the very influential business community. And the business community have now testing and I'm on the SegWit 2X mailing list, have no doubt here. They're not doing replay protection because they don't want to split. They want one Bitcoin. And the people that are supporting SegWit 2X want 2X to be that Bitcoin. So their plan is to do everything that they can to make sure that there is only one Bitcoin and there is not a split. And so that means taking away the replay protection. And so the way that I look at this right now is the core implementation, the wallets, the exchanges, are all going to have to step up now and decide what their policy is and how they're actually going to deal with it. And whether there's going to be a split or not is going to be determined by wallets, exchanges, the general community around, and how they actually handle these this scenario. What I believe will come at the end of it is, by the end of this year, every single wallet, every single exchange, every single business within this ecosystem, all of the different types of developers, all of the miners will have a template for how they handle this moving forward in 2018. And the end result is going to be is that we have really stepped up the game in terms of what Bitcoin can actually handle, how it can handle it, and set policies. And I think that drives out a whole load of uncertainty that was very uncertain in Bitcoin before. And 2018 was a year that the whole world threw everything at it. And if and when Bitcoin reaches record highs after the 2x dip, and no doubt there will be a dip and there will be an accumulation, and Wall Street and everyone will come along and buy some, maybe, I don't know, maybe there'll be some $4,000 to $5,000 Bitcoins, and it will go through its 2x. And then the community, the developers, everyone's going to figure out how we still have 21 million Bitcoins. And essentially what this is to me is an attempt to change the developers behind Bitcoin. And 2x is definitely an attempt. There's certain people that don't want core, or the people behind core developing, and there's other people that want different people developing behind it. So now we're just showing what can happen with these alternative implementations. We've seen this before years ago with XT and Classic and all these different attempts to try and change a development team. And I just think it's going to be stronger than ever, and then we'll reach the record highs. And then throughout 2018, it's just going to be free money for everybody. Everyone's going to have a policy. It's going to be easy for everyone to do. Exchanges are going to know what to expect. People are going to have opinions about which companies they want to use based upon the reaction that they had to this and the sides that they took. And the community is just going to move forward in a market-driven environment where Bitcoin has seen most of the major objections that most people put up when they say that they're not actually going to invest. So when someone comes to me now and says, "Oh, what happens when the government attacks?" We'll just say, "Well, we've already got that example. What happens when all these different things? We've already got that example, and I'll tell you exactly what happens. Record highs happen."
Wow, you summed up all the current events in that right then. That was really awesome. Everyone watching this show right now, live or taped, pound that like button for Simon Dixon. I want to say hello to the viewers in Hawaii. There's some people. It's still yesterday in Hawaii. Hi guys. I saw some people over there in the chat in Hawaii. So do check out the notes section below, people. You can get t-shirts like this. You can get your Trezor. There are all sorts of discount links. I forgot to say that at the beginning of the show. But I want to move into some specific things that you just said. I mean, there are a lot of questions here. One, for the people out there, again, to put it in a little bit of simpler terms, I would say 2x is going to cause some problem. There are going to be people questioning Bitcoin. But November will pass. There will be a December and there will be a January. And it appears that you think that when we get into 2018, it's all this uncertainty that we've been dealing with in so many different forms will be gone. It will be cleared up. And we are going to be in this new era of, a lack of FUD. I mean, definitely something will come up, but I think you're very bullish because of this. Am I making a good conclusion here? Or?
Absolutely. Look, Bitcoin never ceases to amaze me, and everyone every month, comes along and throws a new surprise at it. But I think this year we have seen, the major weaknesses being taken head on. It's making, people understand a lot more about this and how to react. And also, you've got to remember that there was a lot of new people that joined our ecosystem this year. And these new people haven't experienced some of the things. But these new people, after 2017, they will enter 2018 as semi-veterans, because they experienced so much in 2017, more than we experienced probably in the 3 years prior in 1 year. And so it's great to see all these newbies that can kind of, they've seen these things before. They understand, they're educating themselves. And 2018 to me is just, the adoption in my mind is just going to be going through the roof in so many fronts. We're getting, lots of businesses that are producing applications. Lots of improvements in the underlying protocol. We have the ability for people to test with these layer 2 solutions. We have the ability for companies to go out there and hate ICOs as much as you might, but we also have the ability for people to decide if they want to experiment with level 2 technology on top of Bitcoin and create something really innovative, then they're in an environment where they could utilize the Ethereum network and raise 100, 20 million, 30 million. and go out there and test their code on the world and produce some really good things. So for 2018, we are in a self-financing paradigm. We have $170 billion of market cap, which is now through these ICOs self-funding the next wave of innovation. Many of them won't happen, but it's still a self-funding ecosystem where the industry is funding itself without having to go to external, without having to sell shares to banks and all those types of things that might have interfered before. We've got this self-sustaining ecosystem, and we've got all the tools now for the industry to get really, really innovative on top of this. And then don't forget, we then got everything, we got things like rootstock coming through, which I believe will be a serious threat to what people are doing on Ethereum. And we've got the ability with all these different tools that we now have. And for me, I mean, the biggest complaint I get from people, at Bitcoin Cash is they keep telling me, the transactions are so high, transaction fees are so high, and you can't get in the next block. But I transact in Bitcoin every day. It's still cheap as chips to me. I still get in every next block, and I pay 14 to 40 cents. I can still, we still do some small micro transactions. The fees aren't as cheap as they used to be. But that's because we're getting adoption, we're getting growth here. If people talk about this tulip bubble that we're in, if you look at the stats, it's growth. It's just like, the internet getting its adoption and going through a growth phase. It's just like, Apple releasing the iPhone and millions of people all around the world are buying that iPhone. That's not called a tulip bubble. That's called growth. And that's what we're experiencing in Bitcoin right now. We're experiencing the growth, and the code is at the phase where it's getting ready for that growth. And through 2018, once we get rid of these, developers having to waste so much time on determining how they deal with these forks, and exchanges wasting so much time on determining how they deal with these forks, and businesses wasting so much time, we can just get on with the market determining. We have this standardized process, and everyone can get on with development, everyone can get on with growth. And I think that's going to usher a wave of innovation in 2018 on an exponential, innovation phase that we've never seen before.
And I want to ask you about ICOs here, because there are people out there that are saying that this fork model, this friendly fork crypto dividend model, is going to maybe make some people rethink going the ICO route. You can make a lot of money off of ICOs, but you can get incredible distribution of your coin by just doing a friendly fork. And there are people that think that it fits more into the legal paradigm to do a friendly fork instead of doing an ICO. How do you think these two these two financial mechanisms are going to interact in 2018, ICOs versus friendly forks?
It's a really interesting question. I think we're going to see more of all. I think that there is not one size fits all for this financial paradigm we're in right now. I think if you're launching a cryptocurrency, then without a doubt, the best way of doing that is to fork Bitcoin, fork Ethereum, fork Zcash, fork Litecoin. And we're going to see all of those throughout 2018. If you're launching a token where you're trying to build some kind of network and it's a utility token, then it fits into the ICO model where you're looking to have some kind of control over that. You're looking to build your own brand around it, and you're looking to build a network effect using that token. Throughout 2018, we've been working on this very hard as well. You'll have regulated securities tokens. So you'll be able to actually not, if your token doesn't have utility, you'll be able to actually sell this as a security in a compliant way to the right people that actually qualify to be able to trade and invest in these securities. And you're going to see all of those in 2018. So you've got a model for launching a new cryptocurrency. You've got a model for launching some kind of network effect. And you've got a model for launching companies raising finance on different blockchains. That is just going to be such if you think right now, I mean, at Bank to the Future, we're receiving 30 applications a day for people that want us to invest in their tokens or companies. I'm forecasting, we're getting ready that our team won't be able to handle all these applications moving forward. You know, that's just the way it's going to be. We're on exponential, rapid growth. This is moving faster than anyone can keep up. And we just got, I see SegWit as kind of SegWit and Rootstock and you know, layer 2 Lightning networks. I mean, maybe it takes a year to get these things moving, and maybe 2018 is a little bit slower than what 2019 will be. But once all these come through, you've just got, you will, you know, we will have people all around the world building on this technology at a pace that no one can keep up with. And that's a real big problem. And, you know, we've got to remember, and maybe not everyone came here for the same thing, but the reason that I signed up to Bitcoin is because I wanted to see the banks get a run for their money. I wanted to see people being able to own their own money. I wanted to be able to see what happens when people spend their own money and allocate their own money without an intermediary determining how it's spent and dictating the growth of the economy. I wanted to see what happens when you give people an exit. I wanted to see the ability for people to actually have choice with their funds, choice with their money, choice with their financial products. And, you know, that's what we're going to see throughout 2018, 2019. This is a major problem for government, central banks, investment banks, retail banks, traditional financial players, and they are all going to be defined over the next 2 years when they determine how they're actually going to react to this, whether they try and own a blockchain and centrally control what they call a blockchain as a database, or whether they embrace this, whether Goldman Sachs is the first to open their Bitcoin trading desk. You know, whatever happens, these financial institutions are all going to be defined over the next 2 years. And JP Morgan is most likely going to be that one that's stuck at the bottom, that Jamie Dimon's family, you know, children are kind of embarrassed about because they're just not moving with the time and protecting the old. You know, Bitcoin does what Jamie Dimon and JP Morgan charges millions in sheltering people's assets all around the world. And Bitcoin does it for free. That's a big problem.
Wow, that was a great line right there. I got to say, and Bitcoin does it for free. So everyone, notice how Simon he's pumped up about 2018 and 2019. I mean, there's some great stuff on the way, and hey, that leads into 2020, the halving. That's what I always remind everyone about. So look how bright things are going to be in 2018 and 2019. Just imagine 2020. So people, hold on to your Bitcoin. Look, we've got descriptions for what's going to happen in 2018, 2019, and 2020. There are going to be ups and downs, but there's so much exciting stuff on the way. So keep it long term, people. Buy and hold. Pound that like button. Simon, I wanted to ask you something very specific about what you were talking about before. Going back to 2x, we're going to be jumping all around here. So you anticipate no replay protection. They're not going to give in, you don't think?
The 2x developers, from what I can see, have no intention of adding replay protection. And so what this does is it means that core exchanges, wallets all need to, you know, you know, they need to figure out what they're going to do around that. And I'm sure they're all going to implement solutions that allow this to go through in a smooth way. It may be a last minute rush. You know, who knows? It's like we had last time. But the 2x, from everything that I've seen and from everything that I've read, they only want one Bitcoin. They don't want to split, and they want to beat Bitcoin.
Now, taking this into, so they're going to cause the maximum amount of trouble and FUD possible, because just the word replay protection, people don't understand it. People are going to think they're going to automatically lose their Bitcoin. People are going to, all sorts of FUD will be going around come November the 19th. With that in mind, and with your knowledge of the Bcash community, because you say you have seen that there are real people behind Bcash, do you think that at that point, Bcash is just going to speak up and say, hey, ignore this battle between these 2x and these core people. There's so much danger there. Now is the time to get to the real Bitcoin, which is Bitcoin Cash. Do you see this all helping Bcash in this, for at least in the short term? I do, and I'm no fan of Bcash, but I really think that they might be some of the people behind Bcash might be part of some of the people behind 2x that are spreading all this fun.
Yeah. Well, my answer is kind of twofold. Firstly, I really don't care because Bitcoin Cash or Bcash is just an altcoin, and I wish them all the luck and the best in increasing the value on the 25% that I haven't sold. And so, you know, it's an altcoin. I'm interested in what Zcash is up to. I'm interested in what I follow it passively. But you know, the thing that it has captured the heart and the imagination of the world, that has the potential to make the most difference in the world, that can genuinely be a store of value and foster all the innovation and all these other altcoins and other things that come along, is Bitcoin. And that's what needs to be protected. And that's what's really important to the world. And I believe each time we're making it protected more and more and more. And so will Bitcoin Cash benefit? So I think in the short term, they're not benefiting. The reason the price is dropping is because if Core or the community or the exchanges or the wallets are all going to figure out a way of giving people their coins, and there is a split, whatever you want to call it, there is a new dividend, let's call it, then everybody needs to own Bitcoin in order to do that. So the strategy, if you're thinking from a pure, even if you were thinking from a rational perspective, your strategy would probably be right now to sell Bitcoin Cash, accumulate as much Bitcoin as you can, and then with those Bitcoin, receive your B gold and receive your, if there's going to be this 2x or whatever it is in the end, that would be the rational strategy. Now, but whether people are not acting rationally here, they're acting out of a longer term vision that they believe that 1 megabyte blocks have no future, and that the core development team are not competent at what they do because of their belief in economics. Then those people are going off to the 2x chain, and those people are going off to the Bitcoin Cash chain. And I think Bitcoin Cash and 2x will be battling it out, really. I just see them as probably competing propositions. I guess you've got an experiment of what happens when you maintain the 1 megabyte block. And by the way, that 1 megabyte block might increase in the future, but it's just a question of when consensus is reached around that. It hasn't been reached. That's why we had these splits. Then you've got a chain that has these increases in block size, but no SegWit. And then you've got a chain that has SegWit and this higher block size. But it's not really a fair comparison because Bitcoin is so much more decentralized than anything else. And then people always say to me, well, yeah, I mean, Bitcoin is not decentralized. You've got centralized miners. You've got Blockstream that controls Bitcoin Core. And it's, there's an element of truth, not the exaggerated truth. There's an element of truth. We have to be realistic here, that the Bitcoin ecosystem does have pockets of centralization. I would prefer that the mining chips are not all manufactured by one major player. That will change in the future, but right now that is the reality. I would prefer that most of the mining did not happen in one geographical location. That will change in the future, but that is the reality today. I would prefer that there was a funding model for how you actually pay the core developers without actually them having to work simultaneously for another company at the same time. But here's the thing. The reason this scaling debate exists, the reason it's taken so long, the reason for the last 3 years everybody's been going berserk at each other is simply because while there are pockets of centralization in certain areas of the ecosystem, they all compete and you have to get consensus till change happens. So you could look at Bitcoin Cash as a group of miners trying to get their way. They couldn't get their way. They ended up with Bitcoin Cash. You can look at, China, a government trying to get their way, trying to crack down on the ecosystem. They couldn't get their way, so we ended up with record highs. 2x is the same. All these things are just simply there. And there is nothing out there more decentralized. You cannot tell me any coin, any other crypto. Now, you could criticize everything, many of these things, and there's definitely room for improvement. But there's nothing that compares, and that's the reality. And that's why whenever anything happens, everybody is trading in and out of Bitcoin. They're not trading in and out of Ethereum. They're not trading in and out of Zcash. They're not trading in and out of dollars unless they were just pure speculators. But what I'm seeing is a trend away from dollars and over to Bitcoins, and Bitcoin's being the reserve currency. And we've got this final little bits of uncertainty to get through.
Yes, that is beautiful. It is, you can complain about centralization, but it is the most decentralized out there, people. It is the one people trade in and out of. It is the world reserve cryptocurrency, no doubt about it. Pound that like button, everyone. Boris, thank you for the $5 in the super chat. I really appreciate it. You are a good guy. A real quick question, Simon. How many Bitcoin do you think are lost forever? This is a question I get asked often.
Oh, I have no good way of putting a real number to that. But all I know is that I know a lot of people that have lost a lot of Bitcoins.
I mean, you said millions before, and I mean, let's say Satoshis are part of, I mean, that's a million right there, right? From what
I know people that were mining in 2009 and just had a hard drive with 50,000 Bitcoins on that they couldn't access because they thought it would have no value. I know people that lost, 25,000 Bitcoins in the Bitcoinica hack. I know people that have them locked up in Mt. Gox. I know, I've got wallets that I haven't figured out how to access, that are just sat there. And one day I'll probably figure out what to actually do once Bitcoin's worth 100,000 per Bitcoin or something like that. But there's an incredible amount that has been lost over the years. I mean, people are more precautious now. There's more resources, but in the early days, I can't tell you how many of these things were just getting lost.
Well, I feel bad for those people, but that's awesome for those of us who control our own private keys. I will tell you that. If there's less of it out there, the better it is for those of us who are holders. Just another reason to be a holder. What's going on with Kim.com and his project? Do you know about this?
Well, yeah, we were seed investors in Bitcash, and Bitcash is one of our Bank to the Future portfolio companies. Kim.com is doing a very the interesting thing about Kim is he's a crazy celebrity. He's a flamboyant person. He's on a mission, for his beliefs about and getting revenge around what happened to him and the US government's attack on him and what that means for the future of the internet and copyright. But before all that happened, Kim.com was a product guy. He was just an entrepreneur that was a product guy. He built product that got, according to him, approximately 4% of the internet at one point in terms of traffic, with hundreds of millions of people uploading to what later became Dropbox and Netflix and iTunes. He was one of those people that created that, the precursors to that with Mega Upload. He's a product guy, and then he became a business celebrity, but fundamentally he knows how to build products that get consumer adoption and mass consumer adoption. And so he's come along. He's been very quiet over the last 2 years. He's been building away. He's got an incredible team of people that have incredible experience at building very, very user-friendly products that get mass adoption from the past. And so Bitcash is essentially a content distribution, and someone like yourself, with the One Bitcoin Show, you'll be able to monetize your content in a new way. And he's building a great user experience around that. And because Kim's a very interesting character because of what's actually happened to him in the past. Anytime he tries to do anything, the traditional banking sector, he can't get banked. So Bitcoin's, very interesting for him because of his, he's kind of like in a Julian Assange WikiLeaks type scenario where he can't be banked. He's tried to do IPOs, and then at the last minute regulators pulled them. And so he's kind of in the scenario where he is a real test case and user case for when an ICO can actually bring to product a life. And so, Kim.com is kind of saying, Hollywood tried to attack me and hold back my product, but we're back. Wall Street tried to attack me and hold back my IPO, but I'm back. And the banks have been trying to attack me. Governments have been trying to attack me. But thanks to this new innovation called Bitcoin and everything that's derived from that, we still have the ability to bring a fully legally compliant product to the world And really for him, an ICO is a real user case of somebody that doesn't have very many other choices, because he's not doing anything which it's kind of like WikiLeaks. It's not necessarily illegal, but it's something that the government doesn't actually want. And so therefore you have an exit to the system, an alternative financial system. And so he's going to be doing an ICO for the next phase of his product, and get ready to launch that. And good luck to him in seeing whether he can roll that out to the world. And I've used the product. It's an extremely useful product for distributing content all over the internet in a censorship-resistant way, and being able to monetize that content. And hopefully he can get traction and launch it to the world.
Well, everyone's been waiting for it. A lot of us thought 2017 was going to be the year of Dotcom. He's a big talker. He talks a big game. So I hope he brings this product along in 2018, and I do hope it rocks the world and brings Bitcoin to the mainstream, or cryptocurrency to the mainstream.
My comment on that is I don't believe any single company is needed to bring Bitcoin to the mainstream. Bitcoin is going to the mainstream on its own. It's just taking a little bit time for people to create services around it. And we've reached the phase where no single company has a long-term lasting effect on the fundamentals of Bitcoin. Bitcoin will get there on its own, and companies will drive adoption faster or slower depending upon the services they release. But the long-term fundamentals are completely unaffected by any company out there.
Okay, that's a very good point to all this. It's not about one person. It's not about one government. It's about it's decentralized. So let's talk about, speaking of one governments. You in the past have brought up how countries are going to start their own centralized cryptocurrencies, and you find no problem with it. It's all right. It's just going to help Bitcoin in the long run. I agree, but there are so many people who just love when they hear that Russia and China are thinking about their own national. They think it's a great, it's a totally. They try to compare it to Bitcoin. These things are not Bitcoin. They are centralized. I would not touch them if I were in those countries. It would make me want to get into Bitcoin even more. So any updates and thoughts about central bank digital currencies?
Yeah, first thing, a central bank digital currency is not an attack on Bitcoin, it's an attack on banking. The way that money is created at the moment is 95% of the money supply is created by private banks. And so they invented digital currency. So when you log into your online banking, that money was not created by a central bank. You can swap it for a note or a coin, which was created by a central bank, but the actual money was created by a retail commercial bank. And so every time they issue a loan, a new deposit gets created. And for every positive balance in your online banking, somebody else has a negative balance. So digital currency is backed by debt, and I don't mean Bitcoin. And digital currency is essentially, it's been around for decades and decades now. And it's the bank's digital version of the currency that you think the government creates if you don't understand how money is created. And so what happens is when a central bank launches a digital currency, they are essentially creating a new form of fiat. So there will be 3 or 4 forms of fiat. There'll be the cash and coins that they print, and the treasury benefits from the revenue for selling cash and coins. The private bank benefits from the interest that they charge on the creation of digital currency every time they issue a loan. And the economy benefits because it increases the money supply every time new loans are issued. And when those loans are repaid, it contracts the money supply. And that's what the boom bust cycle is. Essentially, it's a central bank pushing up interest rates in order to make your debt more expensive so that you go bankrupt so that they can cool down the economy. When they put down interest rates, they're trying to encourage you to go into debt so that banks create more money, and that increases the money supply so they can cool up the economy. And then eventually, once the economy cools up too much, you had too much inflation, then what they do is they send you bankrupt by pushing up interest rates so your debt. And essentially, that's what central banking is. It's trying to manipulate how much money, digital currency that the private banks create. Now, what's happening here is the central bank is coming along and saying, we need protection from the retail banks. There's huge systemic risk in retail banking. The government needs to guarantee all those deposits, and banks take excessive risks with your deposits, and we guarantee the system. So we need a fail-safe. If a bank goes bust, we don't want to bail it out and have taxpayers pay the money. We don't want to bail it in and have consumers lose faith in the banking system and they all jump to Bitcoin. So what are we going to do? Well, we can create our own digital currency. And if the bank needs to go bust, then all the deposits can be replaced with a central bank digital currency, so that you don't have a contraction in the money supply and a huge, contraction in the economy as a result of banks. So this is big problem for banks, which is good for Bitcoin. Now, these digital currencies will be atomically swapped. They will have exchanges, and they will flow easier into any alternative currency, into any Bitcoin, into anything. And these, once you have these API keys, now granted, the central banks can shut off the API keys and shut off innovation and be very selective over which fintech companies they allow to build on top of them. But the end result is as follows. The end result is the user experience of fiat gets worse, because when a central bank can switch off based upon their algorithm of how you're spending your money, and if you go to the wrong country, if you do the wrong thing, if they think you owe them tax, if you just send an email to the wrong person because they got a backdoor into Google's API, if you search the wrong thing on the internet, then your digital currency is going to be switched off, and you're going to have to go to the central bank and explain what you're doing with your money if you want it back. That really ruins the user experience of money. And so therefore, people are going to decide that they will only hold the minimum amount of money that they want the central bank to control. And the reason that they'll do it is because it's got a great user experience. Let's face it, fiat has a good user experience. You go and you buy bread and the price is stable, and you don't need to worry about what the price of Bitcoin to the renminbi or USD is doing. And so you will have that convenient money, but savings will move over to these less controlled, more decentralized financial products, and they will all be built upon Bitcoin, because Bitcoin is the store of value and the underlying technology that allows you to have the censorship resistance that is required in order to have these different options. So Russia coming along and saying that they want to create a digital currency just means they're attacking the banking system. They're replacing the bank's money supply with their own money supply, and they're protecting for the eventuality that that bank might be able to go bust. And then they're also creating, a new form of technology that fintech companies will be able to build on top of. And then those can be atomically swapped or integrated or decentralized, exchanged, or anything into any kind of value that you want. The entire financial system is completely changing. This should be encouraged. It educates the entire world into blockchain. It makes the user experience of your traditional money so bad that you will be forced into the user experience of money that you own, and you're going to get a Trezor wallet, and you're going to start to learn how to do this stuff, because you're going to be peed off when the government claims that they owe you $5,000 and you're saying that they don't, and your finance is switched off.
Oh my God, that was everything is bullish Bitcoin, dudes. That's something to take from that. And I love your take on the digital currency of countries. I really, I wish all people could hear what you just said. So everybody, share this video, pound that like button so people do get to hear some of that. I have a question. What's your thoughts? I mean, there's some people out there who, when they hear the word pre-mine, they just go wild. Now, if a coin is 100% pre-mined, then yeah, I understand. But what do you think about the technique of, if you're starting a new altcoin, whether it be a crypto dividend, whether it be the traditional way, whether it be some new way, that you do set up a small pre-mine in order to compensate the people who were working on the coin? Do you feel this to be a big turnoff? Do you see this to be a trend in the future? What's your take on pre-mines in general?
I think the most important thing is transparency. So whenever you're doing a cryptocurrency, people need to understand the economics. You need to do everything to communicate the economics, and then people can opt in or opt out, whatever they want to do. There are some very interesting models. Now, if you're talking about Bitcoin as a cryptocurrency and you're trying to create an alternative to Bitcoin, and you're trying to create what you believe will be the next store of value, then any kind of pre-mine is going to be very, very off-putting, because that's not the way that a world reserve cryptocurrency is going to get adoption, in my opinion. Now, however, there are very, very interesting models coming through where you need to figure out, one of the biggest problems that we're experiencing with the scaling debate is that we do not have a model for how you pay developers. And so there's many different models that you can actually implement, you can try. And we've had hundreds of different models been implemented across all these different altcoins. And so it's more of a question of, you just need to be transparent about your economics and understand, ICOs are the ultimate pre-mine, I guess you could say. They're taking 50%, keeping it on the company balance sheet. And they're taking the other 50% and sending it on the token sale. And that's okay, as long as you've actually transparently said that, you've made that very clear, and people understand what they're actually buying into. So, it's kind of what I see a lot in the crypto community is people judge things based upon their understanding of the utility that they think it's going to provide. So, and I'm guilty as well. When banks come along and tell us about what blockchain that they're going to do and blockchain this and blockchain that, I start analyzing it from the perspective of trying to create a decentralized, currency like Bitcoin. And obviously, none of the decisions that you'd make when you're trying to make, are the same or compatible. So one of the big challenges of this sector is actually, there's a lot of different user cases that come from this, and you can set it up in many different ways. And the beauty of the blockchain and the community is that you actually get to audit that. And as long as there is some kind of way of auditing it, I get a bit skeptical about the ones that have to rely upon some kind of trust, which is why private blockchain just seems like a really strange word to me. It's private shared database. But it's very hard for me to analyze every single thing with the same hat, because and part of the big problems with this sector is just trying to keep up with the different things that people are actually trying to achieve. But yeah, pre-mine is kind of a headache from when there was all these altcoin scams being created before the ICO boom. There was lots and lots of altcoins. It kind of went through create your own altcoin, then it went to create your own ICO, then it went to hard forks, and then it will be whatever the next version of it, when it all plugs together in the decentralized way, whatever it's going to do. There's going to be so many different ways and things of doing it that it's just going to be really, really interesting. But yeah, I think that the hate towards pre-mine comes from all those pre-mined altcoin scams that came around, and I'm sure there's going to be many, many more to come. It's kind of just buyer beware. It took years for people to understand Bitcoin, let alone these other things.
I think you really summed it up nicely with the word transparency. If you're investing into anything, make sure there's transparency, people, that all the facts, how many are going to be created, if they can just all of a sudden make 100 billion more, if there's a hard cap on the amount that they can create. Again, Ethereum, there's still no hard cap on it. They still can make as many Ethereum as they want. And so that's out there, but people seem to ignore that.
That's an interesting, that's the exact example. That user case is the exact user case we should use. So people are judging Ethereum based upon their understanding of Bitcoin. And Bitcoin and Ethereum are completely different things. Ethereum was designed as a platform that needed inflation built in so that it could not be restricted, because they didn't want the price of Ethereum to go up, because it would make smart contracts more expensive. So it was never designed to be an asset class that people invest in. It was never designed to go up in value. It was never designed to do any of the things that Bitcoin tried to achieve. And that's exactly what it's for. So if you're building a smart contract system, but the problem is people came along and said, hey, we've got this better version of Bitcoin with faster confirmations and it's going to do everything that Bitcoin did. And so a massive amount of people start speculating on the price of Ethereum rather than actually using it to build smart contracts, as it does with Bitcoin. A massive amount speculate on the price of Bitcoin rather than using it for owning your own money. That's why Coinbase exists. If you were trying to earn your own money, you'd have a Trezor wallet. If it's in Coinbase, it means you're not trying to earn your own money, you're speculating on it, which is okay. There's lots of different players in this ecosystem that make it work. But then what people try and do is they try and analyze Ethereum from the perspective of Bitcoin. And obviously, if you're trying to create Bitcoin, then Ethereum is an awful cryptocurrency. And they're analyzing Bitcoin from the perspective of what they're trying to do with Ethereum. And obviously, at the moment, Bitcoin is useless for doing all these ICOs and stuff like that because it wasn't designed for that. So I think you've really come up with the perfect user case of analyzing one thing from the perspective of your understanding of how you're using the asset class that you're interested in. And it's just humans, coming from their perspective and that's why we have a lot of trolling and argument in the community. And my goal has always been, and people might call this a bit airy-fairy, but I found great value in trying, and I don't get it wrong. I don't get it right all the time, and I'm a flawed human that makes mistakes all the time. But I always try to seek first to understand from the perspective that somebody else is coming through, because I think it helps me be more subjective in my analysis. Does that mean that I don't get in a Twitter storm debating some idiot that's telling me Bitcoin's a Ponzi scheme? No, we all do that as humans. But my challenge is always to try and come from the perspective. And one thing I've tried to do throughout the scaling debate is appreciate what all the different players and their roles have been in actually getting Bitcoin to where it is today at this, I think we're below 6,000 right now, but we'll be back soon. And just trying to have an appreciation for the different players, the role that they're playing. And I think that helps us to have better debate. But then I also appreciate that there's benefit in real aggressive trolling and chaos, and it helps people, kind of hold themselves to a higher standard. And I think all the attacks on the core developers have led them to be, in some senses, better developers, more transparent, better with communications, because they have to be in order to kind of stand up to some of these attacks. Now there is a problem in that there's a tremendous amount of energy wasted when you could have been doing something very productive. But I don't know how to solve those. It's just human nature.
Yes, people, don't worry. Don't waste your time. It is human nature to waste time on things and not be productive. Be productive. Don't get into these. If you find yourself getting into Twitter fights, get out of them and just hold your Bitcoin and be happy you have it. I want to go back. You bring up an interesting point about Ethereum. Looking at it through a Bitcoin lens, looking at Ethereum through a Bitcoin perspective is not the proper way to look at it. Yet, I have to say that I think most people out there, including Ethereum fans, look at it through a Bitcoin perspective. Look at it as if it is a competitor to Bitcoin, that it can beat Bitcoin, that there can be this flippening. Are people ever going to learn that that's not the proper way? And do you agree that most people in the cryptocurrency space do not look at Ethereum the proper way? Then they look at it as through the Bitcoin lens.
Yeah, absolutely. That's the vast majority. But if you actually speak to the people that created Ethereum, they don't have the same rhetoric as you. If you actually speak to some of the people that are actually under the hood, they're scared shitless about scaling issues. They're really fearful that all these ICOs are kind of, they're coming too soon and the technology is not ready for it all. They're saying that we never went here to compete with Bitcoin. But they get driven into that because the rhetoric from people is trying to focus on what's going to win. And Bitcoin has won and will win store of value. Ethereum for now has one, ICOs. It's a crowdfunding platform. That's you know, that the store of value one is, in my mind, is like extremely hard to disrupt. It's very, very hard to disrupt. It's kind of like trying to disrupt the internet in my mind at this point. You know, you could create a more private version of the internet, but it will be an alternative to the internet, and people will still be building websites on the internet. I don't think that, I mean, Ethereum has built a strong network effect on ICOs, and the ecosystem's getting stronger and stronger every day, and it is, and that, you know, that definitely is a major head start. But I wouldn't say the jury's out on whether it's going to be the final ICO platform yet. If it's going to be the technology that's most appropriate for ICOs. And so that's why you're getting lots and lots of competing blockchains that want to come and compete with Ethereum. And you know, you've got blockchains that want to compete with of Bitcoin. But I kind of like Charlie Lee's approach. You know, he was out for doing innovation with Litecoin. He was out for doing something complementary to Bitcoin. He was never out there to try and compete with Bitcoin. And hey, if you want to try and compete with Bitcoin, good luck to you. It's a very, 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 very challenging thing to do. But that's what's driving us all. This is a market-driven experiment that is going incredibly well, and created $170 billion of value, and will be pushing through $1 trillion in the next couple of years, no doubt about it.
Oh yeah, to a trillion, man. Yeah. All right, so we've reached the end of the show here. And speaking about $1 trillion, that's a really good positive way to end it. What are your conclusionary remarks that you'd like to share before we go off air?
I think anyone that's been in Bitcoin for the last year should really analyze and see what they've actually learned from the last year. And if you were one of those people that tried to day trade Bitcoin, actually look at how much money you lost, and actually look at when you tried to sell Bitcoin because Bitcoin Unlimited came along, and when you tried to buy it after, and when you tried to catch all those tops and bottoms. I'd encourage you to actually look at how much money you've lost, and if you actually just did nothing and put it on a Trezor wallet. And the message here is that, you know, let's just summarize what we've already said. I guess 2017 is the year of uncertainty, and that uncertainty is going away. 2018 is a year of institutional adoption, where Wall Street and all the financial centers all around the world get in, and that, you know, that's going to be a tremendous amount of boost to the ecosystem, a tremendous amount of demand. Then you'll get your ETF, and once the ETF comes through, you'll have all your retail volume and all the, you know, mums and pups and pension funds and all the insurance funds and everyone coming in once you have your ETF. And then you're heading up to 2019, which is where I think in 2018 we would have had a whole year of Lightning Network, SegWit, different hard forks, bigger megabytes, you know, bigger blocks, and everyone can see what happens to all those things. And in 2019, we'll be clear, there will be some significant applications that drive tremendous volume and tremendous adoption that come from that. And then in 2020, half. That's just a really exciting roadmap to look forward to. Then the demand, you know, the supply that's entered into the economy every 10 minutes just goes in half. Now, my guess, and I could be wrong, but if you try to second guess and get insider information and trade around all the events that Bitcoin's about to throw at you and this whole crypto market is about to throw at you, you may be in a position that I know many people are today. I know many people that were around in 2011, 2012, and only have a few Bitcoins. And the reason is because they were trying to trade them. They were trying to second guess. They thought the high had arisen. They thought it couldn't go higher, or they thought the bottom was there, you know. And that's just, it's just virtually impossible. Just think about those long-term fundamentals. Forget about the short-term trends, and I promise you, you're gonna be in a good place. Or we're all, this whole thing, you know, kind of failed. and we look at the next thing, whatever it is going to be. There is a small risk for that, but I just believe that we've hit a critical mass where that can't be anymore.
I could not have said it better myself. Strong hand, people. Just hold your Bitcoin. He gave some really good reasons why, and what happens to you when you don't think long term. So think long term. Thank you very much, Simon Dixon, for being on the show today. His links are below. It's always a pleasure to have him on this show. I am Adam Meister, the Bitcoin Meister, the Disrupt Meister. Remember to subscribe to this channel, share this video, pound that like button, check out the links below for all sorts of discounts on shirts and Trezors. We talked about Trezors. Storage devices are very important. Control your private key, people. I will see you later tomorrow. Bye-bye, everyone. Thank you very much for tuning in.